On All About Stocks this week, the Nifty reclaims 8800. We tell you what your investment strategy should be. Ambareesh Baliga tells you why you should be investing in Archies for the long term. He has also made a profit of 72% on his portfolio. We tell you how you can get similar returns. Hello everyone and welcome to All About Stocks. This is the show specifically meant for long-term retail investors. Over the next half hour, we will be telling you what your investment strategy should be in these very confusing and volatile markets and which stocks will give you the best returns in the long term. We'll also be answering all of the questions that you've sent in to us through the week. Now remember, you can email us or even visit our Facebook page with your queries. Well, first up, let's start the show by bringing on board my colleague Ajay from our research desk to give us an update on all the market action this week, and an interesting week it has been. Ajay.
We've added about 1.5% each on the benchmark Sensex and Nifty. Well, mid-caps have outperformed with about 2.5% kind of gains. Small caps too, just a shade less than 2%. So it's been a good week. A combination of factors. Well, the Indian markets had witnessed almost a correction of 6% on the benchmark Nifty, and the bank Nifty actually had fallen about 12%. So they were in a kind of a oversold territory, and a technical rebound was due. But the technical rebound got accelerated because of improved global cues. In fact, the peace talks and the truce in Ukraine from Russia, etc., actually aided the sentiment of rebound. Not only that, the kind of earnings season which we are witnessing at the fag end of the earnings season, the large caps of the sectors like SBI, M&M came out with good set of numbers. Again, gave an impression to the trader and the investing community that perhaps all was not that bad in the earnings season this quarter, and things may start improving. And of course, we are already witnessing that some kind of fresh positions were being taken in the futures market by FIIs. However, FIIs continue to remain mild sellers in the cash market. At least DIIs were buying much more, with much more gutso, over, buying out almost what FIIs are selling each day. So this week was a very action-packed week with global cues, very wild volatility on the benchmark indices, earnings, all of the factors playing in, but net we actually saw gains. Traders also say that there was a pre-budget positioning by some of the institutional guys which was seen, because the complexion of the gains this time was interest rate sensitive, policy sensitive, like banks, autos, capital goods and powers. These were the sectors which outperform, and they say that this perhaps is a making of a pre-budget rally which may well continue in the coming week as well.
Joining us today on the show, we've got Ambareesh Baliga, who is independent market analyst. So let's start off, Ambareesh, by discussing the prospects of the markets. Indeed, it's going to be pretty dicey to, focus on which direction we're headed, ahead of that crucial budget. But what's the sense that you're getting in terms of the liquidity flow situation, as well as what we can expect for the frontline indices?
No, sentiment is extremely good, despite the sort of a drubbing which BJP got. And early expectation was, in case the hung parliament or in case they lose, we could have the markets coming down or correcting sharply. But instead of that, we have seen the market really bouncing back with a lot of vigor. So this clearly shows that the sentiment is extremely good, money flows is there, and we are actually in a pre-budget sort of a rally. So I don't think there's much of a question as to which way the markets will go before budget. It's clearly upwards. And it's very much possible that we could again try for that 9,000 levels which we missed by a whisker last time. So that's very much possible. But post-budget, the question is as to how the budget would be. In case there's some disappointment, we could see a sharp correction.
Okay, so confident of that pre-budget rally at least. But Ambareesh, let's also talk a bit about the pharma space. It's been in a sweet spot indeed, one of the top performing sectors for the week gone by. And it's not just been isolated to the large caps. A lot of the mid caps have been contributing as well. Do you think that all of the positives have now been priced in, or there's more to go?
No, they have been priced in to a certain extent. But then I still see the pharma sector performing at least for the next 1 or 2 quarters foreseeable. But then overall, if you're talking of 2015, I clearly see the manufacturing space, the power, infrastructure, capital goods space. This is the space which I think will outperform, because they have not done well in the past couple of years. But then unless the government does not support or give SOPs for this sector, we may not really achieve that 9-10% sort of a growth which we're talking in the next 2 or 3 years. So once these SOPs come in, I think the a clear focus of the investors would shift to these sectors, and they would outperform.
What's the view on the PSU banking lot? Because you throw a dart at any of them, and when it comes to numbers, it's been awfully disappointing, be it asset quality or even the net profit front. So how is it that you would approach this space? With a little bit of trepidation?
This is what I've been saying now for the last 5-6 months, that one needs to be a bit careful of the PSU space because of the sort of NPA problems which are there. And that's not going to go away till the economy really improves. And I don't see the economy improving in a hurry. It may not be in the next 1 or 2 quarters. So this NPA issue will come back to haunt them. So I don't think you should be looking at the PSU space, the banking space at this point of time. And based on that, in case you have a correction in the private sector banks, I think that is an opportunity. So I would suggest people to possibly look at stocks like Axis Bank, ICICI Bank, which is there, the portfolio among the smaller ones, DCB, IndusInd to a certain extent, but the PSU banking space to be avoided at least for the next 1 or 2 quarters.
What's the call coming in on some of the, the FMCG names as well?
Right.
I know you spoke of that high beta tilt, manufacturing, capital goods, etc. But
right.
You do have the fundamentals, which do seem to be intact for some of these names, so they're very slow movers.
No, but then the fear there is actually the discretionary spends, and that is actually coming down. Although we are talking of sentiment being extremely good, but when it comes to actually, spending money, that we are not really seeing in the economy, whether it's consumers or whether it's business owners. We are not seeing them also write out checks for expansion. So these are spots which are actually a spot of worry for us as investors, especially when the markets are at these levels. So I think FMCG to a certain extent I would be a bit careful. But yes, you still have those picks like ITC, HUL has been performing to a decent extent. But then overall I would be a bit cautious.
And how are you looking at the overall setup for, some of the infrastructure as well as the capital goods names? Because you said you don't see an economic recovery kicking in too soon. So what makes you bullish here?
No, but that has to kick in. Because, I don't think we have a choice today. Clearly the government has to give SOPs, or it needs to clearly pump in money, because the private sector is not going to pump in unless you see spending coming in from the government. And unless there are SOPs for these sectors, I really don't see a recovery happening. So because of which I think the budget is going to be crucial, and I'm quite hopeful that we'll see SOPs coming in. And that is what will make these sectors move.
Let's get then straight on to our viewer queries. And Sriram has sent in this query saying that he holds 550 shares of NTPC that's bought at a level of 136. Now the question is, should he hold on or should he sell? Ambareesh, you had added this stock to the portfolio the last time that you were here on the show. Do you think that the fundamentals here remain intact? He's in the money so far.
Right. See, it's a cash-rich company, the largest in the thermal space. And clearly, I see a lot of SOPs for the power sector, because you really can't have the economy growing if your power sector is not growing. And no fresh investments will come into the space unless it's actually profitable for the new investments to come in. So, like I've been talking earlier, SOPs would be there for this sector, and NTPC would be the biggest beneficiary. And the stock hasn't really done anything in the last 1 year or so. Since we bought it also the last time, it's moved up about 6-7%. But then I see this stock performing extremely well over the next 2 years. So this is not a short-term story. One has to hold on for the next 2 years.
Okay, so Sriram, when it comes to NTPC, this one's for keeps. Stay invested for the long haul. You will see things picking up on ground, and that in turn will bode well for NTPC. Moving on then to the banking space, Akanksha has sent us the next query now. She's sent it in on Karur Vysya Bank. She's got the shares at a price point of 452 and now wants to know if she should hold on or sell to this investment. Given the kind of returns that we've seen, Karur Vysya also 7% return in net profits for the third quarter. What's your advice for Akanksha?
I think she should just hold on, because again, like I said, private sector space is to be held on, and especially like a bank like this, looking at what happened to ING, going ahead, there's very much of a possibility of some sort of a merger, consolidation. So I think one should hold on.
Okay, so stay put when it comes to Karur Vysya Bank. Lots of mergers, acquisition, consolidation is expected, and this indeed has been a fairly active space. Hope, Akanksha, we were able to help you out. Well, Himanshu Kumar has sent in the next query, and these are two questions. He's got 300 shares of Emphasis that's bought at a level of 458. And then from the education space, there's EduComp at 82 rupees. And for both these stocks, Ambareesh, the question is, should he hold on or sell? Do you think that Emphasis is somewhat better placed in the IT space vis-a-vis some of the other mid-cap players? And what's the call on EduComp?
No, not really. I mean, I would say it was more of an underperformer. I mean, I would suggest that he should exit that and possibly look at investing in Infosys or a HCL Tech, which I think would be a better performance going ahead. EduComp, again, I think it was a story which has gone completely wrong. But I mean, I wouldn't advise him to sell at the current levels of 24, 25. I think it's about nearly 20%, 25% of his purchase price. But then in case of a bounce back, and normally you see some interest coming into this stock or the sector I mean, closer to the budget. So at that point of time, if he gets levels of about 30, 34, I think that's the time he should possibly exit.
Okay, those are some of the important levels to monitor on both of the stocks that you hold. Hope we were able to help you out. Now time to get you the top recommendation then from Ambareesh Baliga. And Ambareesh, you've chosen to pick out an Archies. Run us through the rationale here. It's a fairly offbeat name. Is it because it's Valentine's weekend?
Absolutely.
Because it, you know, in terms of numbers, it's been a little bit disappointing.
Numbers have been disappointing, but numbers may not be disappointing going ahead. And that's how you normally pick up a value stock. I mean, where you're not seeing too much of a value in the recent past. And I mean, you clearly see value going ahead. In fact, I look at I mean, an EPS of about 3.4, 3.5 for FY16, and based on that, I'm looking at a price of closer to about 42, 43. The reason why I picked up Archies, other than the performance going ahead, is clearly that it's the leader in that space of social expression, and they have extremely good tie-ups, Hallmark and American Greetings, and recently they've got into the e-commerce space through Snapdeal, and this is going to be the big story going ahead.
Okay, so look to enter the stock at around the current levels and watch out for targets of close to 43. Archies is the stock that Ambareesh is betting on, largely on account of the e-commerce play and, of course, an earnings recovery. Well, time for a quick break right here on the show, but do stay tuned. After we come back, we will be reviewing Ambareesh Baliga's portfolio, discussing stocks like Infosys as well as L&T. Stay tuned. Welcome back. You're still tuned into All About Stocks on ET Now. We still have our guest, Ambareesh Baliga, with us, helping out figure the strategy that you should be watching for your long-term portfolios. Now, let's take a glance at Ambareesh's portfolio that he recommended the last time. And indeed, it is sitting on a pretty smart gain. The overall gain on the portfolio is close to 72.7%. And it's outperformed the Nifty returns from the same time frame. That's the 4th of January 2014 of about 42%. So let's take a look at the stocks. There's Himmat Singh Kaseed. He's got from the banking space, ICICI Bank. L&T, 2 features on the list, giving a very smart return. From the media basket, Z Entertainment is the pick. There's Alembic Pharma, which has given returns of 100% plus. Ditto is the case with Pidilite. Lupin is in the portfolio as well, one of the better placed pharma stocks. NTPC, as we just spoke of a while ago. Infosys from the IT basket, seeing quite a bit of interest there now. There's a Bajaj Finance too. Once again, pharma exposure in the form of Ipca Laboratories. There's, of course, the all-time favorite from the auto ancillary basket, Motherson Sumi, close to 138% returns. Ambareesh, let's discuss some of the chops and changes that you're planning to make.
In fact, I'm trying to sell Motherson Sumi, not because I'm negative on that stock, but then it's given me an extremely good return. But I don't really expect it to outperform going ahead. Basically because I believe that the export story, as far as overall India is concerned, may actually underperform, looking at the sort of headwinds which could be there as far as the currency is concerned. And I believe that other than US, you will have most of the other economies underperforming, which will create a pressure as far as the export market is concerned overall. So because of which I would possibly shift to a stock like Tata Steel, which again has underperformed in the recent past, and the latest results haven't been too great. But I do believe then going ahead with the infra boom which we'll see out here, we'll actually see at least the Indian business turning around, which actually hadn't done too well in the recent past, although you had the European business still continuing to do decently well. So Tata Steel is my pick, at least for the next year and a half point of view. And since we have seen a good correction in this stock, I think the current entry level would be ideal.
Okay, that's a change that has been made in the portfolio. So let's just recap then. There's NTPC, ICICI Bank, L&T, Z Entertainment, Alembic Pharmaceuticals, Pidilite, Lupin, Himmat Singh Kased, there's Infosys, Bajaj Finance, Ipca Laboratories and Tata Steel. So far, just a couple of chops and changes. But let's move right on then and get on board some more queries then. Allahabad Bank is what we're focusing on. And this time sent in to us from Suneet Shukla, who's holding 100 shares of Allahabad Bank. The buy price is about 125. There's 15 shares of Wipro as well. Wants to know if he should hold or sell here. Run us through what exactly you would be advising on an Allahabad Bank. It's fetched at a level of close to 125.
Right.
And what would you make of Wipro given the kind of earnings we've seen so far? Because there seems to be a little bit of caution now creeping into the IT space.
Absolutely. Although Wipro earnings were okay, I would say, but then I would surely prefer a stock like Infosys or HCL Tech, which I said. And even I had Wipro earlier in my portfolio, which had switched. So I would advise him to switch either to HCL Tech or Infosys. And as far as Allahabad Bank is concerned, it's the same view as far as the overall PSU banking space is concerned. I would suggest him to shift to DCB Bank.
Okay, Sunil, that's a word of advice coming in from Ambareesh. It's better that you put your money into a DCB vis-a-vis an Allahabad Bank, and instead of a Wipro, you can see a little more upside in something like an HCL Tech or an Infosys. Moving right on, we've got a query coming in on PTC India. Srilata has sent this in to us. Now, she holds 200 shares of PTC India. She's picked it up at a level of almost 95 rupees and now wants to know whether she should hold or sell. PTC India, what would you advise here? The profits have been a little bit disappointing this time around and she's losing out here. Do you think she should stay put, just wait it out?
No, if she's a long-term investor, I would advise her to just hold on. Like I said, overall the power sector seems to be getting into action over the next couple of months. So I think she should just hold on to that. But if she's a short-term trader, yes, I think it's time she booked out. Because, it's possible that we could see either 5-6 rupees lower than here.
Okay, so that's a call that you need to take, whether it's a long or a short-term time horizon. And you can perhaps put your money in another stock if you're looking to wait it out. Next up, let's focus in on Aban Offshore. Maruti sent in the query saying that he holds 120 shares of Aban Offshore. That's at a price point of 850. There's also from the PSU banking lot 180 shares of Canara Bank picked up at 418. What do you think he should do here? Because these two, I don't know how stable they are when it comes to fundamentals.
Especially Aban Offshore, I would suggest him to exit. I think he bought it at a very high price, and after that, the way the oil prices have fallen, this is clearly, putting up pressure on the rigs business, which basically Aban Offshore is into. And because of which, I think at least for the next foreseeable future, when I say foreseeable future, I'm talking of the next year and a half, I really don't see this company really reviving majorly. So I think at the current levels, he should possibly exit Aban Offshore. And as far as Canara Bank is concerned, I would possibly make one exception because this is one of the few PSU banks which I would possibly just hold on, not really buy fresh. But still, I would suggest in case he wants to switch, he should look at a stock like Axis Bank.
Okay, Maruti, hope you took note of the advice that Ambareesh had to give on both your stocks, Aban Offshore as well as Canara Bank. Moving right on then, we've got another query coming in from Rohit Gupta. Now, Rohit says he has 150 shares of L&T. He's bought this at 562. There's ICICI Bank picked up at a level of 403. Should Rohit hold on or sell? Because Ambareesh, I know you're very bullish on both these stocks in your portfolio as well.
You know my answer is there in my portfolio. And despite the sort of results which have come for L&T, I'm still quite bullish. And in fact, I was possibly utilizing that opportunity to buy at lower levels. In fact, I was waiting for levels of 1400, 1450. That never came. So I would just hold on to both L&T as well as ICICI Bank.
Okay, so it's a fairly clear call coming in on both those stocks. Stay put. Hope we helped everyone out with their queries. Let's take a quick break then right here on the show. When we're back, we'll be discussing stocks like Marico and Crystal. Don't go anywhere. Welcome back. Still tuned into All About Stocks. Ambareesh Baliga is still here with us, helping us make money in the long term. And now let's go across to our portfolio query for the day. And Aditya, it's your lucky day. We will be discussing all of the stocks that you sent in to us on your portfolio, whether or not you should hold on or sell. Well, let's start off with the first stock from the FMCG basket. 45 shares of Marico picked up at a level of 333. Ambareesh, so far so good. The results have been impressive. He's in the money. What's the call?
Again, Marico is one of those few FMCG stocks which I'll just hold on because I think the performance should continue. So there's no reason for him to possibly exit at these levels.
Okay, so stay invested. Marico is the stock that you can hold. Moving on then to Crystal. He's got just a small quantity, about 8 shares at a level of 873. The counter has run up fairly significantly.
But still, he should just hold on because clearly, I mean, this is an annuity business. And there is no way, the performance can get worse year on year. It has to only keep on getting better and better. And that's one of the reasons why the stock has really performed in the last couple of years. I think it's just a hold.
Okay, let's move right on then to Diwan Housing. There's close to 135 shares of this counter and it's picked up at a level of 367. Do you think that, from this space, this is one of the good bets?
So this is surely one of the better bets from that space. Again, looking at the housing loan segment, especially for the budget housing, this is where Diwan Housing is. And that's where you should see a boom going ahead over the next couple of years, especially because the interest rates will be coming down. So I think even at these levels, it makes sense buying fresh.
Okay, United Spirits then, Ambareesh, a small quantity in the money, fortunately, 26.20. Is there more to go here?
In fact, I did not expect this last move, because of which I exited from United Spirits last time from my portfolio. But even at these levels, I wouldn't be bullish. So I would suggest him to possibly book out to a certain extent and get into ITC, which I see performing better than United Spirits.
Okay, so perhaps you look to put your money into an ITC instead, stronger fundamentals. 20 shares of ONGC, it's been surrounded by quite a bit of news, 257. What's the call?
I think once there is clarity on the subsidy sharing, I think this stock would have bottomed out by then. Because of which I would say that it's time to hold, not really to sell at this point of time.
Okay, and finally from the auto basket, there's Hero MotoCorp. From the two-wheeler space, 3,120 is the buy price. It's just about 5 shares. What would you advise, Aditya?
Just hold on, because I think clearly this is a stable performer in the two-wheeler space. Although TVS performed extremely well over the last year and a half, but this time it disappointed to a certain extent. So, and at the same time, Bajaj Auto hasn't really been going anywhere. So, from the two-wheeler space, it would be Hero.
Okay, that's the advice, Aditya, that Ambareesh has on your overall portfolio. I hope you took all of that down. But in the meantime, Ambareesh, is there any disclosure that you would like to give?
Yeah, disclosure there. The stocks we have discussed, you can safely assume is there in my personal portfolio. Also, the clients I'm advising.
Ambareesh, it's been great having you with us on the show. Thanks so much for joining in and helping us out with all those viewer queries. And on that note, we wrap it up here on the show. Thanks so much for watching. Please do keep sending in all of your stock queries on facebook.com/allaboutstocks.